Welcome back to the Hurdle Rate. I'm Tim Kotzman in New York, episode 39 for the week of December 8th, 2025. We've got Jeff Walton, Matt Cole, and Ben Workman all in Abu Dhabi. I think. I'm not there, so I don't know, but that's where they say they are. We have plenty of video proof that they're over there. Super intrigued as to how the conference is going, and I'm sure we'll cover a few other things as well, including Strategy's latest nearly billion dollar purchase. Bernstein saying that maybe the 4-year cycle is gone and we're going to go up from here. And 11 out of 12 FOMC members, I guess, support and expect a 50 basis point rate cut here this week on Wednesday. So that's making its way around social media. Intrigued as to what everybody thinks about that. I think it's bullish. Over to Ben. Are you still awake? What time is it over there?
It's 11:30 p.m. over here, so we're juggling the time zone difference here. You flip your time zones, it screws with you here for a little bit, but we're powering through. And today was day one of the Bitcoin Meta conference. So it kicked off today. You had the Bitcoin for Corporations symposium in there, and it was a busy day. And what's really interesting is there's just a ton of energy here around this, and I think that surprised me more than I expected it would. When you came here, Jeff and I came in a little bit earlier, and so we were able to kind of travel around Abu Dhabi a little bit and check out the city and see everything that they're building here. And it really does blow your mind, like the investment that they're making over here and the pace at which they're building this. We were talking to someone tonight who basically said, 60 years ago, this place didn't exist. And now it's just got this really modern architecture all over the place. It's beautiful. But you also realize that these people are all passionate about technology. And as Saylor put it in one of his talks today, they're also very passionate about money. And that intersects with Bitcoin. And because of that, they've gotten really great engagement out here and really great support out here in the Middle East around Bitcoin. And there's become a lot of interest that started popping up. And that's what you started to see with all the posts that Saylor was making. He was in Bahrain and Kuwait and Qatar and Dubai and Abu Dhabi. And he's making the rounds and he's doing exactly what you would expect Saylor to do, right? He's out pitching the big ideas to the sovereign wealth funds, to the banks directly, to the major family offices that are out here. And he's really working on pushing both Bitcoin as digital capital, but also the power for them to integrate digital credit into their economy. So it's really pretty incredible here. The Bitcoin Meta conference, they've done an amazing job so far. And I know tomorrow's a big day as well with a lot of really great panels. So I'm excited to see what tomorrow's going to bring.
Yeah, Sailor's in the process of inciting sovereign FOMO. And no, this is my first time in the Middle East, and I echo Ben's comments. I was totally blown away by the architecture here. And this, you can see hard money everywhere you look. The US isn't building buildings like they're building here, and they're building them here fast. We went to the Louvre Museum, and it was this just crazy enormous building, the size of a football stadium, and it had this circular spherical lid that sits on top with no pillars underneath, so it's just wide open. It's just this enormous building with massive architecture, and you look outside, and it's literally built in the water. And like not normally built in the water, it's like the water goes up to the walls, and it's just a phenomenal building. Anyway, the point being, you can see what a culture looks like that is founded and built on hard money, because their money is a function of the wealth of oil that they have here, and that it's been built in the last 60 years, and you can see that everywhere. And one thing that's also struck me in speaking with some of the locals, in learning about the political environment, the regulatory environment, the capital environment, how people invest, who is investing, what the capital scale is, how the Middle East works together and works separately and different, and how each different country has different exchanges and what they're all trying to do to get on these different exchanges and launch corporations in different areas and how they're, kind of utilizing them. But another one that struck me is that one of these guys today, he said, our country has a clean balance sheet. Our country has no debt. And I kind of stopped for a moment. That blew me away. I was like, what do you mean? It's hard to conceptualize. You look
You
at our
don't have
country.
runaway trillions of dollars of debt.
Yeah. You don't, yeah, you don't have runaway debt, and you have this country built on oil wealth. And yeah, there's a really unique opportunity for the Middle East to continue to carry this wealth if they convert the portions of it into, digital energy. You take it from, crude oil and turn it into digital energy, and you're looking at a country that was very poor 100 years ago and can now have 1,000-year reign if they can convert, portions of their wealth into digital currency. So interesting, very, very fascinating conversations.
Yeah, it feels like you're in a region here where you're kind of watching the beginning of what the future transition is going to look like, right? They built the wealth on a finite asset in oil. Obviously we haven't hit the end of the oil yet, but that that's a finite resource. And it seems like you're now on the edge of them looking at what is it going to be that's next that really sustains here? Is it going to be tourism? Are we going to be able to build around tourism? Are we going to open up new industries? And you're starting to see a massive focus on technology. And it's really becoming a technology hub. And because of that, I think that there's a real opportunity here where the next scarce asset that they transition to, that they start to move that wealth to, could be something like Bitcoin. And Saylor was really pitching that pretty hard because they've got a really unique structure out here that would allow them to do things that most countries in the world, particularly in the US, you wouldn't be able to do. And so he started by, he goes through his big idea, bigger idea, and biggest idea, right? It's kind of the way that he approaches this. And they asked him, when you were going around and talking to these banks and these sovereign wealth funds, he's like, what were you telling them? And he goes, well, what I told him was, the big idea is you take your sovereign wealth and you buy digital capital with it. And you do that if you don't trust anybody. But you could also buy digital credit, and you're going to get 2 to 4 times, as much as you would get out of traditional credit. So that's another big idea. But if you want really amplified exposure, you could take that sovereign wealth and you could buy the equities of treasury companies and try to find the next trillion-dollar company. He goes, that's a big idea. The bigger idea was to have your bank custody Bitcoin, right? Take self-custody of it with your bank directly, and then offer credit networks on top of that Bitcoin and lend against it at SOFR plus 50. And doing that, right, you'll attract the trillions of dollars to your bank in your country because most of the big regulated banks won't handle Bitcoin and they won't extend credit against it. And then he said, the biggest idea, which takes both a country and a bank, and he was on stage and he goes, I have neither. He goes, I don't have a country and I don't have a bank. He goes, but I'm looking out here and I see several people that have both. And he goes, so the really big idea is you look at the traditional credit market, right, which is a 200 trillion plus market. And when you realize that the only reason that people are buying corporate bonds or mortgage-backed securities is because your bank interest is insufficient and you're looking for other alternatives. And so what was the biggest idea? He said the biggest idea was really around creating high-powered digital money, which was a term that came from Satoshi. And it's corporations holding Bitcoin that create high-powered digital money. So what he was saying was you should create a fund, and that fund should be 80% credit, 20% currency, and then you put a 10% reserve buffer on top of all of that. So you strip away all the volatility, and through your bank in your country, you offer an 8% rate on that. And you do this with a regulated bank in your country, endorsed by the bank regulator of your country, something that's unique to this region that they have some control over. And then you're powering that offering with digital credit. So you're building a bank that's powered by digital credit and powered by treasury companies. So treasury companies effectively become the backbone of that banking system. And the way that he kind of ended that was what you're effectively doing here is you're creating the digital banking capital of the world, right? You're creating Switzerland for the 21st century. And he left it off with one thing going, if you want the here, he called it, he goes, when you create these digital bank accounts, he goes, you're creating the lightsaber of money. I just thought that was kind of a great way for him to frame that. But that was what he was running around the region pitching. He's going, listen, there's not a lot of places in the world that have their own country that they have control over, that have the regulators that they have control over, and that own the banks, that can tie all these together, and you can siphon the money out of the countries like a Japan or out of Europe where they're offering you 0% on all your money there, and you effectively build Switzerland in a digital bank form. And if you do that before everybody else and you offer people the attractive rate that keeps them from having to go and search for things like corporate bonds and mortgage-backed securities and all these other offerings to find higher yield than what they can get out of your bank account, you've got the ability to attract trillions and trillions of dollars into your country. And so it was a pretty interesting concept that he was laying out there, and to hear that that's what he was, making the rounds, and that was the pitch he was making in the room was pretty fascinating to me.
One other thought, just from some of the conversations that I had, was around how early it is when it comes to Bitcoin treasury companies in the Middle East. There's not one on an exchange right now, and you see still though the energy to make that happen here, and it's going to happen. It's just a matter of time, and there's a lot of norms because of religious differences in the Middle East and regulations that make the opportunity for likely real meaningful differentiation to pull in substantial capital into Bitcoin in the Middle East in ways that a company like Strategy or Strive could never compete with, just because it's local to some of the differences here. And so you see a lot of room for growth and a lot of investors in nations here like Saudi Arabia that can't access Bitcoin today and are concerned that they're not going to be able to buy Bitcoin until it's like $500,000 or $1 million. And as some of those innovations happen, there is, like many places around the world, a lot of capital that wants exposure to Bitcoin that still can't access it today. And I think that's a theme that we see in the United States. I mean, even with Vanguard recently opening up access to be able to buy Bitcoin, but this is a global phenomenon that there are so many doors that need to be open, and it's fascinating when you see some of these doors and you see, oh, the behind this door is $1 trillion, and it's like, okay, that's a lot of money that obviously would want access to Bitcoin, and you just see because they want to buy and there's a lot of capital there and they can't buy today, and there's so many of these doors, all the different tailwinds that we still have behind Bitcoin, in addition to just the macro theses that we talk about all the time on the debasement trade and the debt crisis, AI, that nothing on this long-term thesis that we've talked about has changed. And I know one of the things you brought up, Tim, was the 4-year cycle potentially being dead, and I can't remember if they said it's like the continuation of the bull market. I mean, I don't think we've even had a bull market, but I would agree with the concept that the 4-year cycle is dead. Um, and that would be true, whether we rip from here or whether we have a crab market for a little bit while longer. But there is a lot of capital and a lot of people that manage real capital that are coming to these events, that are listening to the hurdle rate or True North and following these stories in the United States very carefully and understand them, and are just waiting for their moment to be able to either do a Bitcoin treasury company or deploy substantial capital. So you really just see that we have a lot of momentum behind us for years to come.
Also gave me a sense of urgency too. Like there's a lot of money here. And I'm gonna go home and have a fire under my ass to keep on pushing everywhere I could potentially go because you can see what life can be like. As you pointed out, Ben, you could see uh, what an advanced, like a more advanced society that's got wealth backed by hard money really, really looks like, and what kind of like this is an inhospitable place normally. Like we're here in December, the weather's fine, but like we're in the middle of the desert. They have all infrastructure, desalination plants. They got fresh water everywhere, food's imported. Like it's just crazy that this place even exists, and yet is thriving. And I've heard Dubai is even crazier. So maybe we'll check out that place next time. But um, and then to the comment on 4-year cycle, yeah. Uh, After continuously seeing these different places, now I've seen Hong Kong, we've seen Amsterdam, and there's people moving forward everywhere, and they're not stopping. And there's a sense of urgency everywhere because they know, you look at Strategy bought 10,000 Bitcoin today. Somebody tapped me on the shoulder, hey, Strategy's bought 10,000 Bitcoin. And it's like, oh my God, we got to keep cooking. And really, the engine of Bitcoin has changed. In cycles of the past, you could think of it as a lawnmower engine with one gear. It's only got one gear and it's spot Bitcoin. And now you've got multiple gears. You've got spot Bitcoin, you've got Bitcoin ETFs, you've got now digital credit products, you've got ability to lend, you've got like all of this infrastructure that's built behind it. Now you've got like a V16 engine, and you can have all of these different cylinders firing at different points in time. And we could see just a completely different look of what Bitcoin future looks like from a price perspective. So I'm excited here.
Oh yeah, very. The other theme that I saw pop up quite a bit today, and I think that it becomes amplified with depending on where you're at in the markets. And so with everything dragging right now, there was this completely renewed focus on yield, generating yield on Bitcoin. And it seems like there's a lot of people that are searching for that now. And, I would say that that conversation, it's evolving quicker than it used to, right? It didn't seem like you used to have the infrastructure in place where they were able to offer, the right risk adjusted products to start making that something interesting outside of derivatives plays. But what was interesting is you're seeing a lot of these companies that are starting to build, and they're building with that in mind. They're seeing these corporations that are accumulating huge amount of Bitcoin, and they're recognizing that all these companies are going to do this different, and there might be a potential to bring products to market. And so, you had one on your panel, Jeff, that was basically creating, margin call insurance on their products. And, there was ways where you could, earn yield on your Bitcoin through that. But I do think it's just it's a symptom of where the markets have been, right? People get terrified of what they view as being idle in the market. And I think that they've seen so many treasury companies kind of grind to a halt as things pulled back, and you kind of set in this panic feeling, and it feels like you want somebody to do something. And it reminds me of what Saylor said on their last earnings call, where he very bluntly positioned it. And he goes, "Well, what do you do if I lose the premium on my equity for a while?" He goes, "Well, you could just do nothing." He goes, "And then I'm just a company with a balance sheet that's growing at 30% a year." He goes, "Is that really a terrible outcome?" And if you have the amplification on your balance sheet already, right, an option can be wait. But I think that, one of the things that got lost, and I really noticed this over the last 6 months, and I think it's natural because of kind of the explosion of more of these companies coming onto the scene and doing things in different ways, is everyone had really gotten comfortable with the long time horizon thinking on Bitcoin itself, right? That was something that everyone sort of accepted, was that with Bitcoin, you were going to have to ride the volatility, but you had to have a really long-term outlook in that investment thesis. And what I've seen really pivot when this started getting ingrained in the equities market is that it's now starting to get treated, or at least communicated as, like trading instruments. right? So you're trying to take a corporation with a balance sheet that's tied to this asset that you understand the time frame consideration for, but you're changing your mindset to try to pin the equity component of that into this short time frame investment thesis. And it seems like the duration mismatch has started to become really amplified recently. And I think that for a lot of people, you need that reminder that these companies are building and fortifying themselves on, what we believe is going to be one of the hardest assets here for the next several decades, right? Like these are balance sheets that are built for strength. And the way that the risk is managed on these companies, they're not putting themselves in points of weakness where you have to make a rash decision that has long-term repercussions on the outcome for your common equity. And I think that's important to remember that any short-term action that you take has a ripple effect throughout time. And so you don't want these companies to go out there and start making quick changes, reacting to all the different moves in the market and starting to change their strategy all the time, because those decisions that they make, those are the types of decisions when you're in a place of panic that can tie you into terms or tie you into structures that remove components of your ability to operate when it's most valuable for your shareholders. And so I think that I've started to see some of that getting highlighted out here with the way that the conversations are shifting, and they're really focusing on, yield generation and putting the Bitcoin at risk and generating yield with that. And I think that it's just a reminder of how you need to align your investment duration mindset when you're dealing with an asset like Bitcoin. What happens in a week or a month or a quarter over the long time frame, which is what this strategy is built around, right, is not what's going to make or break this for these companies. You want them to be methodical, you want them to be intentional, and you want them to manage the risk that's associated with this. So I'm starting to see more messaging around that, but I think that now that the market's calmed down a little bit and Bitcoin's, kind of stabilized and has stopped going down, I'm hoping that that mindset kind of reshifts and you reevaluate the way that you're approaching this investment thesis.
I totally agree. I think a basic question to ask with whether it's yield strategies or whether it's investing in an operating business really is is Bitcoin the hurdle rate for those decisions? And maybe for sometimes the answer is yes, but I think that's a question that should be clearly answered if you're trying to beat the total return of Bitcoin, because sometimes we people think about in terms of yield or dividends or price return, all components of total return, and they miss the picture of total return. And you really have to think about total return. If you're thinking about amplified Bitcoin in a Bitcoin treasury structure, a asset that has more volatility than Bitcoin, obviously a longer duration than owning Bitcoin in itself if you're taking more volatility. And I think sometimes that can be lost from the thesis or isn't clearly articulated from the thesis. And generally speaking, if you take an average yield strategy would likely reduce the risk of the investment, reduce the volatility of the investment, and reduce the total return of the investment. Is that a good thing or a bad thing? It's not necessarily a bad thing, if that's what your investment objective is. But if your investment objective is, I want to maximize total return over the long run, most yield strategies will actually fail on that. Just like if you look at, as examples, yield strategies in traditional finance, like covered call strategies, they underperform on a total return basis. They're also very popular. A lot of investors like them. And so that's fine, but if you want to say my goal is to outperform Bitcoin, you have to think very carefully of if Bitcoin goes up a lot, is the holistic strategy that I'm putting in place designed to outperform Bitcoin in that scenario? By how much? Some of them might outperform Bitcoin in that scenario, but maybe it's very minuscule because of the design structure versus something like a digital credit with amplification turned up to 20, 30%. or higher, if Bitcoin goes up 30, 50%, you have a lot of upside. Some of the other strategies may have a little bit less. And so I think it's important to understand the risk and return profile under all different scenarios, right? Because the flip side is also true that in crabby markets, the yield strategies might outperform because you've given up some of that upside, you've created some yield, and it could do better in certain scenarios. But understanding those profiles, I think, is important. I think still not fully understood by a lot of the market.
I think, strategy's done a pretty good job with the way that they message this to the market pretty regularly. And what you have to remember is that the primary product that they launched this around was enhanced volatility, right? That was what they were trying to create in the common equity. And everybody loves enhanced volatility when it's going up, right? And then as soon as you start seeing what enhanced volatility means going the other direction, there's panic and people think things need to change. And, this is the design of these equities. This is amplified Bitcoin, and you're going to get the amplified volatility of the Bitcoin. And that doesn't mean that it's broken. That means it's performing as expected, right? You're going to have outsized moves to the upside. You're going to have outsized move to the downside. And that's a part of that specific product that's getting created. And when you start layering on all these other components, a lot of them have volatility dampening effects. And that may be desirable to some investors. They may find that they like that outcome better. But when you're trying to run this, where you've got to focus on creating amplified Bitcoin and then structured yield products, right? That's a different type of a structure. And that's where, strategy's trying to get to. That's where we've gotten to. And I think that that's an important message that you have to continue to put out there in the market to go, look, when Bitcoin's drawing down, and particularly when it's drawing down over an extended time frame, how would you expect amplified Bitcoin to perform? It's likely going to draw down alongside Bitcoin and potentially faster. And that's the design. That's not the flaw, right? You're creating that amplified volatility. You're creating the vibrancy in your derivatives market around your equity, right? You're creating this ecosystem, and that volatility creates the opportunities for other investors to find ways to utilize your product for their specific strategies. But it was at one of the events in New York, and Jeff, I think you actually asked him this question. But what he said when people were asking him, like, why doesn't he sell covered calls against their Bitcoin? And the response was, if I do that, I'm taking an opportunity away from somebody else who can build in my ecosystem, right? If I'm taking that opportunity for myself and I'm deviating from what I've told the market that I'm trying to create, what I'm doing is taking away from the building and the opportunities for other people to build on my ecosystem and bring their capital into my ecosystem and trade based on their own strategies. And I think that's an important concept. I think that one gets lost pretty quick along the way, but I think it's actually vitally important to continuing to attract capital into that ecosystem is for the market to understand that the product you've created is amplified Bitcoin that should act like amplified Bitcoin. And that means up and that means down.
Yeah, you're looking to increase your Bitcoin exposure per share over time with a healthier balance sheet. And one comparison to make, I'm going to go to insurance. Surprise, surprise. It's like looking at a like imagine a Florida insurance company, right? There's a ton of insurance companies in Florida and the rates are super high, right? Because hurricanes come through all the time. But guess what? If you charge really high insurance rates and there's no hurricane, you make a ton of money. That's high volatility exposure, but high potential return. And you can funnel that money back in and you run it back. The next year, maybe you write 20% more insurance. And if a hurricane comes through, you just hope you still have more dollars than you started with, right? And you're taking this long-term view. And that's very similar to what these companies are doing. It's like, how do I take on just a little bit more exposure and grow my balance sheet and amplify my exposure all over the place? The great thing here with Bitcoin is you don't have to take on the physical risk. It's just like incredible. That's the huge unlock here You don't have to take on hurricane risk. You just have to take on the digital volatility. You have to underwrite society wanting to continue to buy more Bitcoin and store their value in Bitcoin. And if you start to view Bitcoin as the hurdle rate, the name of this podcast, and view Bitcoin as your unit of account, it's easy to see the world that way.
Yeah, it's also easy to move past the focus on the operating companies. You see that happen as well when you're on the downside of amplified Bitcoin as well, as all of a sudden there's a focus on the
The,
operating
the flavor of
companies.
the month.
Yeah. And it comes up a lot, right? And it doesn't mean that there's not going to be companies with operating businesses that don't do really well. But to Matt's point, you have to view that operating business through the hurdle rate of Bitcoin. Are you going to be able to run those operations in a way that outperforms Bitcoin, that creates more return, more value than Bitcoin? And that's incredibly hard to do. And so you've got to be incredibly intentional about the structure and the way that that's being run, but you also have to be honest with yourself about whether you are eroding value through that operation over time, right? Like it might feel during times like this, you might go, okay, well, there's at least a little cash flow there, so that's great. But what you forget is that when you're running operating companies like that, it requires constant reinvestment of capital to continue to scale, to continue to run, to continue to grow, right? You're building products, you're writing code, you're paying people for marketing, you got sales teams that are out there, you're doing R&D, you've got a lot of legal work around that, you've got regulations you got to follow, like there's a lot of expense to that. And so on the other side of all of those costs, are you beating the hurdle rate of Bitcoin or not? And that ultimately determines whether this is additive to this strategy or whether it's actually detracting value over a long period of time. Because take 10 years of taking capital that would have been better suited in Bitcoin where it could have outperformed. And if your business is only returning 15%, if you're losing 15% a year on that opportunity cost, you compound that over a decade, that's a significant number, right? So I think it is, to Matt's point, for a lot of these questions or a lot of these companies, you have to ask yourself, are we truly putting ourselves on a standard where Bitcoin is our hurdle rate for all investment decisions that we're going to make or not? And there can be multiple flavors here. It's not going to be a yes for everybody. But for treasury companies in particular that are trying to work in the digital credit space, like Bitcoin has to be your hurdle rate for this.
And the hurdle rate's high. And that's
The hurdle rate's high.
part of the hard thing, right? Is you look at the average startup, 90% of startups fail. And so if you think about a startup, whether it's in the Bitcoin ecosystem or any ecosystem, you have a 90% chance of failure. You have two decisions. One, do you do a large amount of capital to pursue a high growth strategy? Well, then you're putting a large amount of capital away from Bitcoin into a strategy that you better be right and you have a 90% chance of failure. Or you say, well, we're not going to invest heavily, we're going to start out really small. Well, that's likely to be a very small business that even if you make a profit, it's probably not going to be a meaningful profit. And so it just becomes really hard that if the average failure rate's 90% on a fiat standard, the average failure rate on a Bitcoin standard should be higher than a 90% failure rate. Maybe it's 95. Okay, so I have a 1 in 20 chance of succeeding. It's hard, and I mean that's why we've chosen the route of focusing on digital credit as the number one goal. I mean we have a operating business that's growing. I mean our operating business has been growing 40-50% a year for the last couple of years, but to invest heavily additional capital into it, it just doesn't beat the hurdle rate of Bitcoin. And that's a reality that we've faced. It's a reality that Saylor's faced, and I think that it's nice to have a clear principle to make those decisions. It makes it easy to say no a lot, because we get ideas every single day, and if the answer on average isn't no, we're probably deviating from that principle.
Yeah, in my mind, it boils down to risk. You have to take on, with an operating business, you have to take on human capital risk. You have to deploy human capital. What's more efficient, human capital or digital capital? Right? That's the risk balance that you're taking when you have the ability to deploy that money. The hurdle rate's high. It's so high.
I think in the position when you start to take the path of digital credit, right, it does make it easier to say no to a lot of other things because digital credit is such a big idea, right? Like this is a journey and a pursuit that really requires your full focus because the opportunity here is so massive. And this could be one of the greatest onboardings of capital into the Bitcoin network that we'll ever see, right? And that's a really big endeavor. And that's why, you keep hearing Saylor hit on companies that are going to do it need to be laser-like focused, right? This needs to consume your time, your energy, your thoughts. Like this is a big idea and it's worthy of pursuing because it can make a real impact, both for Bitcoin and then ultimately for the shareholders of the companies that are pursuing it with everything that they've got.
Yeah, this is super interesting, especially this week, from the ecosystem talk to the operating companies to the preferreds with digital capital, because today in the US, you have ProCap, BRR starting to trade. Tomorrow, you have XXI 21 starting to trade. Wednesday, there's probably a 99% chance we get some sort of rate cut, whether that's 25 or 50 basis points. So who knows what Thursday or Friday will bring, but pretty interesting week. As fiat systems falter, wealth preservation isn't a strategy, it's survival. While the world reacts, Swan Private clients are already prepared. Swan Private builds strong relationships with clients around mutual conviction in Bitcoin's long-term promise. With concierge service, deep expertise, and airtight security, the Swan Private team helps build generational wealth the right way. Swan Private's comprehensive Bitcoin wealth platform serves over 5,000 clients with more than $4.5 billion of Bitcoin purchased to cold storage. Swan Private is built for long-term partnerships. Get started today at swan.com/private. Any closing thoughts?
Just one thought on the strategy buy. I think it's their largest Bitcoin purchase since July, in a single week. Even larger than the stream purchase. So very large buy.
Jeff,
Yeah,
Jeff has a closing thought.
I do. I have an idea. It was, there's been a lot of thought about it's like dilution, right? The strategy, issuing common stock and buying Bitcoin. And again, people aren't necessarily conceptualizing this concept of accretion. And now everybody, it seems, was very surprised about this buy, but positively surprised about this buy when the MNAV of the company was nearly 1. So if the MNAV of the company is nearly 1 and you're selling shares for $1 and you're buying at $1 of Bitcoin, there's no dilution, right? If there's no dilution or accretion, what can you be mad at? Then you take that same concept and you look at them selling shares at a premium, and it looks even better, right? The concept looks even better. So it's similar to like if a tree falls in the woods and no one's there to hear it, does it make a sound?
Yeah. What if it's not dilutive or accretive?
Right. Like, and they're like, "Whoa!" Now I'm okay with it.
Yeah.
Now I'm okay with it. Right? It's a bit strange, a bit odd, but yeah, now capacity's increased, and they're going to keep pounding the pavement on digital credit. So exciting week, big buy.
It also just reinforces their access to capital, right?
Yeah.
Like
1.4 billion.
These have not been the most bullish of markets, and they come out and they bought, what is that, 1.4 scribes in a week? Like, wow. Like that's a buy. That's a big buy. And they raised that. And even when they raised the 1.4 billion, and you saw that they were only on the common equity for like 4.6% of the volume, which is pretty low. Like it just shows you just how much liquidity there is around those products, which also tells you the value of an equity that's purpose-built to be amplified Bitcoin, right? There's liquidity there because there's demand, because there's a lot of people trading it. There's a lot of products built on the back of it, and it's desirable in a serious way. And this just shows you that hasn't stopped one bit. No matter if the market's up, if the market's down, there's liquidity there. It's trading.
it's almost like the market reacted to very positively to the cash on the balance sheet, and then they got a ton of energy in the door on the common. The stock became far more attractive. People were able to wrap their heads around it, and they were able to capitalize and monetize that. It does feel like the tides are turning.
Yeah, it does.
Yeah. Pretty interesting to just see how all of these conversations and narratives, to Ben's point, really develop. And part of what I was thinking earlier with a couple of these companies starting to trade this week is, I think Anthony and Jack have come out with different versions of a financial services company sort of narrative, which speaks to the operating side of the business that we talked about. So interesting times to see how the ecosystem develops. And we'll be back next week. So thanks everybody for listening and watching. For Ben Workman, Matt Cole, and Jeff Walton, I'm Tim Kotzman. Episode 39, over and out.